Man, oh man, oh man. Central bank market rigging horrified about the biggest global bank run in history. This is silverdoctors.com, but it's SRS Rocco, the SRSRoccoReport.com. SRSRoccoReport.com. I read through this. It's kind of a rant, but it's also like, in your face truth. And I'm like, man, this is right up my alley. Absolutely. This has to be, respoken to my subscribers. This is just something we all have to hear. The Fed and central banks are manipulating the gold and silver price because they are horrified that the biggest global bank run in history will take down the entire system. And wasn't it JP Morgan that just got done saying, as I reported the other day, liquidity is going to be okay for the banks until later this year. Late this year. They were saying around December of this year. That's when there's going to be a problem. And they were suggesting, get this, JP Morgan, the bank, suggesting that medium banks merge and or buy up and merge with smaller banks because there's going to be some problems. And I said then, yeah, that's because they want you all to merge together so that when problems come to you guys next that they didn't foresee, nobody saw this coming, we're going to merge some banks. They're going to merge them with the top dogs. The too big to fails. And I find that very interesting that JP Morgan has come out and said all these medium-sized banks and small banks, you guys should start merging now, like before the end of the year now. Lindsey Williams' elite friend long ago told him, when this was all said and done, their plan was to have somewhere between 6 and 9 or so major banks in America, and that's your only choice. It's the only banks you'll have to choose from. So in other words, Bank of America, Citi, Wells Fargo, Chase, JP Morgan Chase, etc. Those were going to be your choices. So I do find that very interesting that they're urging the smaller guys to merge. And in my opinion, so that they don't have to do so much merging when it's time. They'll just take over you guys who took over those other guys who took over those other guys. Big fish eats little fish, okay? That was a different video. I'm talking something different now, but I had to mention that. Unfortunately, a lot of investors are still being misled about the fundamentals of precious metals market manipulation. While the Fed and central bank are indeed intervening in the gold market and silver market, they are also propping up the majority of asset values across the board. That's funny. Isn't that all we're talking about lately? All these insane prices, stock market, housing prices, vehicles even. Well, that's okay. I'll give you an 8-year loan. Come get it. This is especially true for the most markets, such as stocks, bonds, and real estate. Yes, it is also true that billions of dollars worth of paper gold and silver are dumped into the market in nanoseconds during very light trading days. Thus, the impact is to cap the gold and silver price, making sure that 99% of investors stay fast asleep. These are the very same investors who the central banks are working extremely hard to keep their funds placed firmly in stocks, bonds, and real estate. I continue to receive emails from individuals who believe the central banks can push the price of gold or silver anywhere they please. This is total rubbish. However, there is some method to their madness. Now, hold on. They can push the price of gold and silver anywhere they please if they really want to. That's a fact. On the derivatives market, the paper market, they could flood more derivatives, paper, silver, and gold than you've ever seen before and push the price down to crap. However, mining companies, etc., they would not survive because they can't survive under a certain price per gold or silver. That's the point he's about to make, but he doesn't really say it like that. He's saying it's rubbish. They can't push the price wherever they want. They can, but they're not going to, or at least if they do, it won't be for a very long period of time because they understand we don't want mines shutting down because we push the price down too far on them. However, as you'll see in the charts, they're only allowed to make a little bit of profit above the price. So they know exactly what costs are, and we're just allowed to make a little bit of money above cost, to mine, get the silver, gold, etc. It is a crying shame that there are still analysts out there misleading their followers with that sort of superficial nonsense. All the Fed and central banks can do is to keep the gold price from exploding higher. They cannot push the value of gold or silver too far below its cost of production. Here is a chart from my previous article, which let's go ahead and pull that up. From my previous article, showing the gold price versus the top two gold miners, which are Barrick and Newmont, cost of production. So the gold price is green, production cost is the orange or color. So as you can see, even from back in 2000, gold price is allowed to go above what production is, but not by a lot. Now, granted, we saw what happened in 2011, right? $1,900 gold, $50 silver. Right, but that was temporary. Price came back down. Here it is. 2013, 2014, 2015, 2016. Right, so it's not much above production cost is what he's trying to say. However, production costs do appear to keep rising. Which, let me pull that back up, because if you look at it, it's interesting to me that at least from 2001, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, and 12, costs were just up. All of a sudden, 2013 happens, production down, production cost, that is, down. 2014 down more, 2015 down even more. 2016, it looks like it just is a hair higher. I mean, just a hair higher. So it looks like this downward movement has stopped, but where's actual real production? Because remember, I told you just recently, showed you, second largest producer of silver has said the good ore is gone, the days of easy access are over, it's done. Okay, so things like that, and they're saying that kind of industry-wide, that's kind of what's happening right now, which means those numbers have to go up. Cost of production has to go up, which automatically means higher prices in silver and gold coming. But I don't think we're going to see higher prices just a little bit like this, a little bit higher. We're going to have global issues to deal with at the same time. Currencies failing, trade wars, currency wars on the way down, race to the bottom. Printing, more printing. Central banks fire up the printers again. The gold market price was always higher than Barrick and Newmont's cost of production. And again, these are the two largest miners. If this chart was to show every silver miner and gold miner, it may look a bit different from this. We might see that production costs, as I was just telling you, don't come up to 2012 and then start coming down a little bit and then start petering off and getting ready to go up again. They may just steadily rose. Anyways, the gold market price was always higher than Barrick and Newmont's cost of production. So as we can plainly see, the Fed and central banks never pushed the annual gold price below Barrick and Newmont's cost of production from 2000 to 2016, not even once. Which means the notion that the Fed and central banks can push the price of gold down to 500 or even zero is total nonsense. They can't do it, and they know it. Again, yes they can, but it would be temporary and it would rebound. It would hurt the miners, which is why they would have to let it rebound. But they could do it, and they can knock a bunch of people off, bring sentiment off the charts to crap. As far as any precious metal investor, oh my God, we never saw $600 gold. Oh my God, $7 silver. No, us, $7 silver. That ain't a sad moment for me. Get the credit cards out, sell some Bitcoin, right? Sell something. I'm going to give me some more. That's what $7 silver do. So that's the other issue they have. Each time they nail the price of gold and silver down, people come out and float out of the woodworks to go buy it up. Furthermore, I have older homestake mining annual reports from the 1970s. Homestake mining was the United States' largest gold producer for more than 50 years. I plan on writing an article showing how homestake's cost of production increased substantially along with the oil price during the inflationary decade of the 1970s. That means the surging gold price during the 1970s was not really due to increased demand, rather it was due to the skyrocketing oil price. Now, I'm about to post these charts again. Let me hold on a second though. I got something to say about this. So oil price skyrocketed in the 70s and so did gold. But oil prices skyrocketed catastrophically in 2008. Remember? But gold prices didn't skyrocket the same. It was 2011 Well, when gold prices skyrocketed to $1,900, not 2008. Oil was way down from $150 a barrel in 2011, finally. But why was gold $1,900? All right, so that doesn't quite make sense. But what he's still saying here is still important. So I just want to point a few things out when I run across them. Now I'm going to post these charts again because it seems as if some folks are still a bit dense. Moreover, I have added another chart for kicks and giggles. Let's pull those up. Please look closely at the following gold, silver, and copper charts. So the first one here, annual gold price versus oil, 1940 to 2016. So oil is the black color, gold is the orange one. Again, there's a pretty close correlation. You could certainly argue that. But again, here we had oil skyrocketing up, 2008. That's when it hit the peak. Remember? Which here's the other issue though. This chart I'm showing you is for the year price. Okay, this is a yearly chart, not a monthly chart within a year. The chart only goes up to $120 a barrel. You and I both know oil was it hit the top of around $146 or $147 a barrel in 2008, sometime around July, I think. It was $150. So if you look at this chart, gold should have been way up here. And it wasn't. And then, as you know, by late 2008, it had come back down, 2009, and it was going down to the $40 and $50 price point, as Lindsey Williams said. Obviously, it ended the year lower, higher than 40, but nonetheless, it did what Lindsey said. But the funny thing here is how gold just goes straight up. It didn't care about 2008, 9, 10, whatever. It just kept going up. So I do have to ask, well, if that's the case, then why did that happen? If it follows oil so perfectly, I'd have to ask that. Nonetheless, though, you can still see a little bit of a correlation here. But here he goes again. Annual silver price versus oil price, 1900 to 2016. So you look at 1980, $40 top for silver, which I know off to the right, the numbers aren't right. Over to the left, excuse me, here we go. Because it was 50. It hit $50. I mean, I don't know if this is inflation adjusted or what, but nonetheless, we all know silver was $50 in 1980 as the high. And while oil went up with it, it certainly isn't even anywhere close to it. Goes back down. Again, 2005, 6, 7, 8. We have the same thing that I just showed you above with the same chart basically with oil. And yet silver did the same thing that gold did. It completely wiped off this whole thing that happened in 2008 and just, didn't peak with it. It just was steadily going up. Then we have the oil price spike, and silver didn't even come up to beat it, which is odd. If you look at 1980 anyways. Copper price, similar chart. Not even going to discuss that one. Back to my reading. According to these charts, the price of gold, silver, and copper have been tied to the oil price. While their movements are not exact, we can see that each moved in tandem with the oil price, especially during the huge surge during the 2000s. If we look at the new copper to oil price chart, we can see that copper price starting in 2003 moved up and down twice right along with oil. Extremely important to understand below. Investors need to understand that the market innately balances supply and demand over the long term. For example, the copper mining industry is not going to bring on twice as much copper supply onto the market than the world needs. Furthermore, the copper mining industry only makes a small percentage of profits to build production slowly. Thus, small profit margins actually limit the growth of the copper mining industry. This is the same for the gold and silver mining industry. While supply and demand play a small role in determining price in the short term, it is less of a factor in the longer term. The cost of production is the leading factor in determining the price of gold, silver, and copper. Now, if you read that, you would understand that the Fed and central banks cannot push the price of gold and silver too far below their cost of production. The only trick that the central banks have is to cap the precious metals prices when they rise. And the reason they do this is to make sure that the 99% of the walking dead keep funneling their funds into stocks, bonds, and real estate. Stay away from the metals. In spite of all the grand conspiracies, Americans still living life high on the hog. This is the next little rant, and I need to take a sip of this. As I showed you the other day, it's kind of green, so my green screen's keying it out. But this is organic cucumber limeade with mint. No high fructose corn syrup, no artificial sweeteners, no colors added, no preservatives, very low sodium, GMO-free, gluten-free. It is pasteurized, keep refrigerated after opening, and consume within 10 days. Contains 20% juice. And the first ingredient, water, filtered water. Then the juice. Stand by. Jay Snip, why are you drinking right out of the bottle? Well, I'm glad you asked. No one else is drinking this but me for some reason. So, in spite of all the grand conspiracies, Americans still living life high on the hog. And this is a rant. You heard old Jay Snip, and I've seen some of y'all's comments. You know what time it is. I do realize that the American standard of living has declined over the past several decades. While many analysts believe this is due to the elite stealing most of the wealth, it has more to do with the falling EROI, energy returned on investment. The falling EROI is destroying our leech and spend suburban way of life in the good old US of A. That being said, I continue to see homes and business pop up all over the place. Sure, some areas of the country aren't doing as well as others, but the restaurants, movie theaters, stores, and highways are full of traffic. Americans are busy moving everywhere and nowhere, spending credit or money they don't really have. Moreover, most Americans live in one of these diverse and classy suburban neighborhoods below. Let me give a little screenshot of that in case you want to see. It may remind you of your neighborhood or mine. If that was a little bit smaller, that would remind me of the one I'm living in right now, as a matter of fact. Same type of roofs, almost the same kind of colors, HOA. You can't color your house, can't paint your house more than these, few colors. And, same kind of yard needs to look the same in the front, the same kind of bushes, and whatever. The majority of Americans live in 3-bedroom homes with 2 baths and all the modern appliances and amenities. Actually, a lot of the newer homes have 4 bedrooms and 3 baths. Now, all of these homes are stuffed full of gobs and gobs of furniture, TVs, appliances, and thousands of assorted clothes, books, electronics, and all kinds of trinkets and garbage. In addition, neatly parked in the garage of these homes, Americans have at least 2 cars. I've got 2 cars, and Apocalypse Pedicab and an Apocalypse Trike, as I've shared with you before. But I do have 2 cars. And the Apocalypse Trike, if those of you haven't seen it yet, it's one of those recumbent 3-wheeled bicycles that I've added a 1,000-watt electric motor and some batteries on. Call it the Apocalypse Trike. I also have the Pedicab that is similar. It's like a tricycle, a giant tricycle with a big giant seat in the back for people. You might see them, little Pedicabs pedaling people around. Also, 1,500-watt electric motor. Ain't a chance in hell I'm pedaling that big thing around with a massive weight in it. So again, at least 2 cars in the driveway. Although easy finance has allowed some to be more fortunate to have 3 cars, maybe even a boat, an RV, possibly several ATVs. Sure, the elite control more stuff than ever today, but so do Americans. We have more crap filling up our homes, garages, and storage facilities than we did 50 years ago. I mean, who in the hell stored their stuff in a private storage facility 50 years ago? I would imagine very few. Today, if you don't have a storage unit, something is wrong with you. Well, something's wrong with me because I don't actually have one. Our motto used to be as American as baseball and apple pie. Now it's Americans work jobs they hate to buy crap and garbage they don't need. Amazing what 50 years can do to a society. Anyhow, if you think the Americans are the only ones at perfecting the cookie-cutter suburban housing development, think again. The Chinese have taken it one step further, LOL. He has a picture he'd like to share with you. Talk about cookie-cutter housing. Reminds me of the... do I still have it up? No, I don't. The Economist magazine cover, the 2017 one, where it's got the guy with the VR headset on and he's blind, the magician, and he's got a 3D printer and he's printing out the exact look-alike houses, like he's 3D printing these houses out on a conveyor belt. That, my friends, is what I just saw in the 2017 cover of the magazine, if I don't mind saying so. Yes, that is a real picture of a suburban housing development in China. By the way, let me go back to that. What gave it away? Hint. A hair, a pinch of smog in the background of that picture. That's all I would have had to said. You would have known exactly where that was at. So yes, that is China. Talk about cookie cutter. You can't get any more identical than that. Well, on the other hand, you will see some blue colored mixed in here and there. Some owners decided to stand out from the rest by installing a swimming pool. And yeah, I see like 3 of them that have a swimming pool. Regardless, Americans have more stuff today than ever, so things aren't really all that bad in the West's greatest empire where we compare ourselves to the poor slobs living in many other third world countries. Okay, so what does all that have to do with precious metals manipulation? Good question. You see, the majority of Americans' wealth is tied up into stocks, bonds, and real estate. Also, these assets are where the federal, state, and local governments receive the overwhelming majority of their tax revenue. Rapidly falling values in any of these assets listed above is the death knell for governments. So it is in the best interest of government to make sure Americans remain brain dead when it comes to understanding real money such as gold and silver. While many believe this may be a grand conspiracy to manipulate Americans, it's not. Rather, I call what has taken place in the U.S. as decades and decades of winging it. That's correct. Shooting from the hip by growing and expanding our economy without any regard for wisdom, prudence, and long-term thought. For example, individuals who live in large metropolis like New York City, you may have sympathies. You have my sympathies, he says. This picture below, which I'll pull up, okay, shows what a construction company had to deal with as it pertains to the massive amount of old underground infrastructure. Many of the water and sewer pipes in big cities are 50 to 75 years old, well beyond their life expectancy. Folks, we are in big trouble, and most Americans have no idea. Thus, central bank market intervention is to keep this insanely complex world of ours going for another day, another week, month, or year. Unfortunately, time is running out. Not because the central banks are running out of paper to print money, but because the cheap and affordable energy that runs the system is running out. I wrote about this in my article, The Bloodbath Continues in the U.S. Major Oil Industry. That article received the most Facebook hits ever at 1,300 plus, which means some people are finally waking up. Precious metals investors ignoring the energy data are making a big mistake. Why? Because the Fed and central banks can continue manipulating the markets forever if it wasn't for the coming energy cliff. Unfortunately, a lot of folks in the alternative media believe in the abiotic oil theory. This is the oil theory that suggests oil is made deep below the mantle of the earth, which allows oil fields to magically refill. So there is no real threat of peak oil. Individuals who believe this nonsense, such as Jerome Corsi in his book Black Gold Stranglehold, have lost all sense of logic and reason. While many of these individuals who believe in the abiotic oil theory are quite intelligent, I am surprised how completely stupid they can be on this subject matter. Real proof why abiotic oil is another lousy conspiracy misleading investors. Those who perpetuate the abiotic oil theory say that the Russians are producing more oil than ever before because they are drilling ultra-deep wells tapping into this limitless supply of oil. Well, if that was true, someone needs to tell the Russians. The Russians aren't drilling ultra-deep wells to get to their oil. Rather, they are drilling a hell of a lot of more horizontal wells, just like the insane U.S. shale oil industry. So, in just 2 years, Russian horizontal well drilling has increased from 22% to 34% from 2014 to 2015. Folks, horizontal wells aren't ultra-deep wells, tens of thousands of feet down. Rather, they are more like the typical shale wells that are 7,000 to 10,000 feet down with long laterals to get to the oil. If Russia is drilling more horizontal wells, just like the U.S. shale oil industry, they are also running out of cheap, high-quality oil. A few months back, I stated that I was going to write an article on this subject matter. I need to do so because a lot of people are being misled by this erroneous conspiracy theory. Now, the reason I have been laying out all this information is to explain central bank precious metals manipulations and how it's all tied together with energy in the markets. If you are only looking at the COMEX paper trading and daily charts, then you only have a small window of the overall market manipulation. Furthermore, precious metals price rigging is only a small part of the total amount of central banks' market intervention. David Stockman discusses this in his recent interview titled Fiscal Bloodbath Coming This Fall, David Stockman, on usawatchdog.com. In the interview, he goes on to say that the Fed and central banks have propped up the bond market by purchasing $20 trillion in treasuries and bonds over the past 20 years. This doesn't include the trillion spent propping up the global equity or stock markets. All this is being done to hold off the world's largest bank run in history. Central banks terrified about the world's largest bank run in history. What the Fed and central banks are really worried about is the world's largest bank run in history. This is why they are now throwing everything in the kitchen sink to prop up the markets. We must remember all the debt, derivatives, and money printing is being done to keep people from freaking out and starting a global bank run. Thus, the Fed and central banks are manipulating the market by controlling market psychology. This goes well beyond gold and silver price rigging. It is a full spectrum, wide-ranging, all-encompassing market intervention never seen before in history. This chart provides the reason in numbers why central banks continue to rig the market. So let's look at that. 217 trillion, real estate, securitized debt, 94 trillion, equity, stock market, 55 trillion, gold and silver, last on the list, a paltry 3.1 trillion. According to data for 2015, the $369 trillion in global stocks, bonds, and real estate, gold and silver only represent 3.1 trillion or less than 1% of the total. Actually, David Stockman, in his interview posted above, states that the global bond market is closer to 100 trillion. Regardless, the massive amount of money digital printing has been done to prop up the $366 trillion in stocks, bonds, and real estate. We must understand all the debt and leverage in the system is the same as when banks in the 1920s loaned out a great deal more gold certificates than they had gold in their vaults. Printing and issuing a lot more gold certificates worked fine until the point that it didn't. In all reality, the U.S. and global financial system are already dead. The citizens of the world just don't know it yet. The only thing that is holding it up is a lot of hot air and central bank market intervention. However, the factor that we take away the Fed and central banks printing press is the disintegration of the U.S. and global oil industry. I am working on an article about the U.S. oil industry is now cannibalizing itself, he says. While there has been news released stating that the oil majors such as ExxonMobil and Chevron are now making profits, this is nothing more than white noise obfuscating the facts. For example, ExxonMobil, Chevron, and ConocoPhillips reduced their capital expenditures by a stunning 40% first quarter 2017 versus first quarter 2016. 40%. The major reason for the reduction in this spending is that these companies are in desperate need of free cash flow. In the past few years, they have been borrowing money to pay for this capital expenditures that they reduced, known as CapEx, or worse, dividends. Many investors who are shareholders in ExxonMobil or Chevron do so because they get a nice fat quarterly dividend. The oil companies realize that if they start cutting dividends, what is the motivation for investors to hold on to their stock? This is especially true as ExxonMobil and Chevron stock prices continue to fall due to lower oil prices. We are now experiencing the beginning stages of the disintegration of the U.S. and global oil industry. While the central banks continue to prop up the markets with money printing and massive liquidity, the biggest global bank run in history is on its way. So, I realized that was a long one, but I had to get that out. How do you protect yourself from something such as that? Again, he kind of talked about it in there. And they're throwing the least amount of money at it. Gold and silver. It's the one thing that history has told us time and time again will save your bacon when the timing is right. And the timing's not right. You can tell by the prices. You can tell by the manipulation. But as he said, this will happen until it doesn't. This works fine until it doesn't. The manipulation of gold and silver until it doesn't. And when it doesn't, you better hope you have some precious metals. Let me remind you of the rule change again for the 100 millionth time. Since I have new subscribers, I do this for them. The CME group put a rule change in for precious metals. Circuit breakers. If they move too much in too short of amount of time, circuit breakers are triggered and you can't buy, sell, trade any of the futures contracts for gold and silver. In other words, the paper market, which sets the price of these things. They never had that rule in place in the entire history of paper trading gold and silver COMEX market. But in 2014, for some crazy reason, they got the bright idea to put that into place. Why do you suppose? Well, we learned they're not trying to cap it down, they're trying to cap it up, as he discussed. And as you've seen recently, it was $18.50 for silver. They slammed that baby down to $16.14, I think was the lowest that I saw. In a matter of days. Okay, matter of days. And now, of course, up to today was up pretty significantly. Silver jumped up. I mean, well, actually, right now it's $16.74. That's a big jump from $16.15 or $14, whatever the hell it was. Not that that matters. Again, they can slam it whenever they feel like it. But the point being is that's going to save your bacon one of these days, and you need to start getting it. And since I'm reading a silverdoctors.com article, they have a website, sdbullion.com, where they sell, you guessed it, gold and silver bullion. In the description box of my video, I also have a link there, /JSNIP4. It's on the link because they said if I send any people over there, they have a landing page for JSNIP4 subscribers, and you can get a 10-ounce bar of silver at spot price, no fee above it, dead spot price. So literally, it's $16.74 right now for an ounce of silver. That's what you pay for a 10-ounce bar. It's fantastic. But it is a specific bar, and if you go to that link, /JSNIP4, sdbullion.com/JSNIP4, you will see the particular bar that they're talking about. It's not good for any bar. It's only that one bar. But nonetheless, and it's also for new customers only, they told me, which is fine. Like I said, I wish I was a new customer because I'd go use my own freaking code and get a 10-ounce bar at spot. Anyways, if you've been thinking about getting silver, precious metals, gold, anything, I used to own gold a little bit, and years ago, I was like, nah, I see the most massive upside potential for silver than gold. Even though gold is more expensive, I believe silver will absolutely outperform gold because it's now 70-to-1 ratio with gold. It needs to be around 20-to-1 like history shows. And that day will be coming when all this crap starts unwinding, I believe. So that in and of itself would be a huge gain of if you had silver versus the same amount invested in gold. And as I always say, you're not going to be upset owning either. You're going to be real happy owning precious metals. But you're going to be, I think, a lot more happier holding some silver. So anyways, that's it. Long video, but again, he kind of paints a good picture on all this stuff, how it's attached to, the price movements of oil and that sort of thing, and why price has to go up here. Again, they're propping the whole market up. That's all they care about. Real estate, stock market, just throw all the money in the kitchen sink at it that we can, while we can. Again, until we can't. And when the can't comes, you better look out below. And let's not forget 1988 cover of The Economist magazine, who's owned partially by the Rothschild dynasty. Get ready for a new world currency 30 years from now in 2018. With a phoenix rising from the burning paper ashes of dollars, paper money, different countries' currencies, all paper, with a big old gold coin around its neck. Precious metals, giant gold coin, 2018. What are the chances 30 years ago, 29, that they had a little message for us sheeple? And just by chance, the central banks are printing money out of control, the most ever. The derivatives products, $500 trillion at least dollars worth out there. Many people say it's way more than that, which are bets on the bet of something else. Another asset. A derivative is a bet on something else. And the Federal Reserve just came out the other day and said they call that a great asset. Derivatives are a great asset. So having a bet in my hand on something else, how it may perform, is a good asset. Well, this can't be an asset. It's only a bet on the asset. It's a bet on the asset. It's not the asset. But the Federal Reserve said it was. Again, I believe endgame is playing out. I believe the endgame is playing out. You don't want to be on the other side of this without any precious metals in your possession. That's all I'm going to tell you. Period. You can ask any of my million. I wish I had 1 million subscribers. I'm going to say any of my subscribers. Oh yeah, old Snippy, man. He's been talking about precious metals for years. But I talk about it for the right reason. It will save your bacon one day. The day is not today. And matter of fact, tomorrow doesn't look good either. And guess what? At $16-something silver, you better go over there with both hands and fists in a pouch and get as much as you can, because that is a phenomenal price. Because when this crap goes down and those prices start to spike and that little circuit breaker gets triggered that the CME group put in by chance in November 2014 for no reason, haven't had to use it yet, you're going to find out how it's used. When they can't control the price like they do now, and it explodes because the markets are crashing and people are flooding, taking their capital flight and putting it in something else, which is going to be cryptocurrencies like Bitcoin, Ethereum, etc., and of course precious metals, which is why they put the rule in the beginning, so that when that day comes, we can deal with it. It's already implemented. It'll just happen. Circuit breaker's triggered. Can't play the game for 15 minutes or whatever the time limit is. I'm not sure what the time is. And then they kick back in. Okay, you can play the game again. And then they skyrocket up. Triggered again. It can happen 4 times in a day, they said. And then after the 4th time, it's just wherever the hell it goes, it goes. And the webbot has said, crazy as it sounds, you're going to see $2 a day moves in silver, followed by $5 a day moves in silver, followed by $20 days. It will be coming. Not necessarily back to back or soon after, but nonetheless, you're going to see it happen. And stuff that is in the webbot report for a long time is pretty much set in stone. It's just that, the timing's not going to be there. And that stuff has been in there since almost day one. It's just a matter of time now. And again, I think we're getting close to it. Maybe 2018, the Rothschild may threw us a bone and gave us a hint, right? Take care.